Hello and welcome to Closing Trades right here in ET Now, and the selling has only intensified for the markets. What looked like a quiet start and many an attempt to actually make back to the green, that's clearly gotten faded into, and then that last hour sell-off, we typically call it the 3 p.m. Sell-off or movement in the market, that's come a little bit earlier. We're now at the session lows, 300 points of a knockoff coming in for the Nifty alone, just about defending that 25K mark now. The breadth of the market also has worsened, to be fair. I mean, to start off trade with, you did have a few, stocks which were actually holding up. Not quite the case anymore. In fact, the count within the F&O universe is just as meager as 29, sitting to the greens. It's largely technology, which is the only island of safety, and that also is now caving way. Infosys perhaps is the only standalone winner today, along with Wipro perhaps, which is less than 1% higher as we speak right now. Infi, the only rank out performer, Wipro less than 1% of an uptick. And then, of course, other names like an Axis, IndusInd Bank, which actually began the day supporting the index, they as well are turning tide. Axis is now barely sitting in the green, and I think if the selling were to actually, intensify from here, maybe Axis also is going to slip into the red. That, of course, is IndusInd Bank. Axis Bank just barely holding on to the greens as we speak right now. BOB, though, has had a better day. That's managed to hold out by about 2.25%. There's Lal Path Labs, Torrent Pharma, Gujarat Gas, few odd winners here and there. But GNFC, Godrej Properties, Granules, M&M Finance, Chambal Fertilizers. The selling has been as excruciating as 5.25% on GNFC, all the way down to Chambal Fertilizers, which is now around 6.5% as we speak. So quite a bit of pressure. And of course, for M&M, it's the Q2 updates, finance that is, which is weighing heavy on the sentiment.
Absolutely, Aisha. It's weighing heavy on M&M Financial sentiment, and not just M&M Financial. Take a look at what DMart is doing in trade today. Avenue Supermart, that one has seen a sharp knock, is actually seen the volumes also are pretty high on that particular counter, is now down about 4.5% or so. And also you have mixed views coming in from brokerages on back of their quarterly performance. Add to the list, take a look at what HDFC Bank is also doing. That one also came out with its quarterly performance, is down about 1%. Reliance Industries once again putting pressure on the markets, because Reliance Industries, remember, fell in excess of about 4% in yesterday's trading session. It actually slipped below the 200 DMA mark, and now it's down about 1% or so. So it is a pretty dull day, or actually it's excruciating pain coming in from markets once again. Take a look at BSC. That one is bucking the trend. It's trading high about 4.5% or so. Even yesterday you had BSC that actually ended the day pretty high, around 7% uptick coming in for BSE in yesterday's trading session. So that's the way how the markets are looking like at this point in time. Select pockets only gaining in trade. Aisha.
Oh, yeah, absolutely. In fact, let me welcome on board Naresh Mirani as well and try and understand the technical construct of the market right now. Naresh, hi, afternoon. One didn't quite see this kind of a sell-off or the weakness in the market to intensify like this. But this late hour selling, what is that telling you? We're down a good 300 points on the index alone.
So we continue to face this selling, and once the selling started, continues and looks like FIs are selling non-stop. And this has been the case for the last 4 sessions now. Till the time we don't start recovering in a meaningful manner, till the end of day, we would look at this selling as a continuation of FI selling and rejig happening. China opens on Tuesday. That could be another price point where we actually see a turn. For now, 24,800, 24,750, which was the swing low, and the low in September, that should be an important support. Overall, the drift is lower, but I think we are getting closer to the support points at 25,000, just 200 points away from a major support.
Europe, though, has been a lot more stable, I must say. They've slightly moved up higher with the US jobs report in view. Musk, of course, has fallen about 7% but I can see the CAC hold up nearly about 0.5%. The FTSE MIB is up 250 points. DAX, though, is flat, but Stock 600 also trading with a marginal positive bias. Quick check on the US futures as well. Pretty flat as of now, but let's see. The street is still awaiting the September jobs report. The markets perhaps would react to that. The one, of course, wherein the bull trend, at least in the near term, seems to be intact is definitely crude. because now that's scaling around that $74.36 to a barrel. Actually, let's put all of this in perspective, all the developments around the globe, and what does it really imply for India? Who better than Mark Mobius, Chairman, Mobius Emerging Opportunities Fund, to talk about exactly that. Mark, hi, good afternoon. Welcome to ET Now once again. Not quite in the pink of health, Mark, unlike the color that you're wearing today, seems to be the state of world markets right now. I mean, it's almost a year now to the Israel-Hamas conflict, and now you've got Iran as the new counterpart. How are you assessing, firstly, the geopolitics at play around the world?
Well, first of all, as you know, the oil situation could get very dire, because if the Middle East situation escalates and attacks on Iran's oil sources take place by Israel, then you're going to see oil prices moving up. Generally speaking, the unstable situation in the Middle East means that we probably are going to see higher oil prices. The only way to solve that, of course, is for the U.S. to drill more. And if Trump gets in, then, of course, you're going to see an incredible increase in U.S. drilling, and therefore some relief on the oil price. But that remains to be seen. The other thing that's happening, of course, is the stimulus package in China is pushing up the Chinese market very remarkably. And of course, that means that the emerging markets index is moving up, because China represents a significant, almost 30% of the index. When that happens, the combination of India and China moving up means that now the emerging markets are outperforming the US market. So China's move is actually going to help India, because more and more investors will be forced to buy emerging markets index. And that means India, not only China, but India. So India looks like it's in pretty good shape. However, with SEBI cracking down on derivatives, that's the reason why you're seeing some backtracking of the Indian market. I think that will probably continue for a while, but it won't be serious.
Of talking points and food for thought there, Mark, but let me pick up on the first point. You know, the fear about oil getting back to 100. We've seen that previously as well, and that definitely doesn't spell good news for oil importing countries and economies, much like India and China both. You think the world can once again go back to that reset in oil, if at all the situation is to escalate and we were to get back to those 100 or even higher levels from right now?
I think we are going to go up on oil for a number of reasons. One, the problems of the Middle East. But more importantly, you must remember oil prices are denominated in US dollars. And the US dollar is getting worth less and less as a result of inflation, money printing in America. Here again, the US election will mean a lot in this situation. If Trump gets in, you probably will see a strengthening of dollar and therefore some relief on the US dollar price of oil. But other than that, I think we're going to see higher oil prices in US dollar terms.
So let's talk about what, we are penciling in when it comes to America and the elections there, because it's getting pretty close to call, and the event as well is much closer, just 2 months away.
Yes, exactly. It's all on pins and needles. We don't know what's going to happen.
Right. Good afternoon, Mark. This is Cheryl also joining in the conversation. And let's shift focus to what's happening in emerging markets. And emerging markets is a space that you've always been bullish on. But given the fact that over the last few weeks, we've seen actually the China stimulus blitz, if you could call it, in China, how do you think that that actually alters the way how you will allocate your funds to the emerging markets now?
Well, of course, I still will be favoring India and Taiwan. Of course, Taiwan benefits from an upturn in China because there's a lot of trade between Taiwan and China. In fact, some people consider, of course, Taiwan as part of China. But that remains to be seen. What we're going to see going forward, I believe, is a big increase in Chinese prices with some corrections along the way, because the Chinese government is determined to see the Chinese market move up. Therefore, they've allocated something like $30 billion in money for stock markets purchases. So that augurs well for not only China, but also for India, because as I said, 50% of all money going into emerging markets is index money. And as the index moves up, people have to buy not only China, but also India.
Exactly the point, because, while China may be in a whatever it takes kind of moment, and perhaps this is not it, perhaps we will see more measures by way of stimulus. But that's the fact, right? Because, Mark, here back home, the fear is that money is going to pull out of India, move into China. But if it's an index allocation, it may be a higher weightage for China, but it's not like you can skip India.
Definitely not. I mean, as I said, going forward in our portfolios, India will still be much bigger than China. Of course, we continue to look at China. We've looked at China even before this upturn, but we find that there are more bargains, more opportunities in India at this stage. Now that can change, of course.
Right. Mark, when you talk about your investment strategy, you've also been of the view that it makes sense to keep significant portion of your allocation in cash to be ready to actually deploy that when there is a volatility in the markets. Can we now say that this is the time that you should go ahead and allocate or deploy your more cash in the markets, given the fact that we are seeing volatile moves across the globe?
Oh, definitely. There's opportunities all over the place. And we've always been trying to be fully invested at all times because the world is big. There's lots of opportunities around, even when the general market is down. The index may be down, but there could be very good opportunities among companies that are not index stocks.
So, Mark, let's start off with the shopping list. What's it that you're buying when it comes to India? Because we too have seen a fair amount of ease off from the top and continue to see so even right now.
What we're doing now is looking more and more at the property stocks and also the infrastructure stocks. Those are the two that seem to be interesting. I can't give you names, but those are the sectors that we are looking at more closely.
Many believe that, the allocations, whenever they get upped for India and if FI participation comes back, which it did sporadically the last 2 months and then again sort of pulled back in the month of October because of the volatile global movements, that private banks, that as a segment in India has underperformed, and that's looking at as the most attractive bottom-up story. Would you also allocate some to private banks at all when it comes to India?
That's one area that we're looking at because the numbers look very attractive. Generally speaking, we are not excited about banks, not only in India, but globally, because there's a degree of problems with transparency and knowing what their loan book actually looks like. But as I said, some of these banks in India are beginning to look interesting.
Though, Mark, do you believe that amidst the world markets, China as a pool is going to outperform as opposed to even India or for that matter, US?
That remains to be seen. China, of course, has outperformed dramatically in the last few weeks, but we'll probably reach a turning point soon because it's moved up too far, too fast. So we'll probably see a correction. But India will continue its upward rise with some corrections along the way.
Mark, you've always been a long-term India bull. We've corrected just a wee bit from the top. We're still at 25,000 in the Nifty. But what are the targets that you're looking at before the year ends?
Probably 50 or more. Who knows? Not before the year end, but by next year.
Okay, that's great. So that's almost double of where we're sitting at. But other than, property and infrastructure, Mark, you've been a long-term India bull. What are the spaces where you think that not just fresh investment, but you would continue to buy more and more on declines?
Well, now, what you're going to see in India is the development of the chip industry. You're going to see a very rapid development of semiconductor production, and that means all of the infrastructure and all of the support for the development and design of chips. So what we're going to see is many, many opportunities to buy these companies these are basically software companies. They call them fabless companies. They don't have fabs, they don't have factories, but they design. And of course, these companies are going to be coming up in India more and more.
Mark, last time when we had this conversation with you, you did mention that you're looking at the mining sector very closely with what's exactly happening in China, the way how the metals counters have moved over the last few trading sessions. Have you actually looked at them more closely and more deeper now, the mining sector?
Yes, mining is very, very interesting now because, you know, commodity prices are moving up. If you look at copper has jumped up and a number of other commodities are looking good besides oil, of course. Generally speaking, we're not too excited about mining companies that actually do the mining, or companies that drill the oil. But we're more interested in the companies that supply the equipment for these industries. So in the case of mining, it would be heavy contracting equipment. In the case of oil, the oil servicing industries, these kinds of people, because their earnings tend to be more steady longer term.
So, Mark, if you had $100 to invest across asset classes and markets, how is it that you're going to divide that?
Equities are always the top. There's no question about that. A little in gold, 10% in gold, but all the rest in equities. From time to time, of course, when we have cash, we put them into short-term fixed income, but that's not something that we would hold for longer term.
I want a country-wise division, Mark, on how that 90% is going to be distributed across world market equities.
Well, it'd be at least 20-30% in India, 20-30% in Taiwan, maybe 10% in China, 10% in Korea. Then the rest scattered around Vietnam, Thailand, Indonesia, Malaysia, Turkey, and a little bit in Brazil.
How is it, Mark, that US has completely skipped your list?
What's that again?
No, I was wondering how US is not part of this 90% allocation at all.
US is there, but it's reflected in these countries. So, for example, there are a lot of stocks listed in the US that are actually Indian, Chinese, Malaysian, whatever stocks done in ADR form. Also, there's some stocks in the US that have an incredible exposure to emerging markets. So there will be some of those in the portfolio.
All right, then, Mark, we leave it there. And as always, you've been a long on India, always a big bull on India. And Nifty target of about 50,000 till next year is what you have mentioned. But I wanted to understand also your target for Sensex then, if 50,000 for Nifty by next year. Year-end target, do you have anything for Sensex?
Probably 100. I've made a prediction in the past, as you know, and we're not too far from that. So you're going to probably see much more upside.
Mark, always a pleasure having you on the show. Thank you so much. And do ping us when you're down in India next.
Yes, I look forward to it. Actually, I'll be in India the end of this month, I think. So maybe we can get together.
Oh, yeah, absolutely. We must. We'll not leave that opportunity, and we'll have our team get in touch with you. Good speaking with you, and look forward to meeting you.
Thank you. All the best.
Thanks. Okay, quick break then. On that note, when we come back, we'll continue tracking markets, which are slipping quite fast.
Welcome back. You're watching Closing Trades right here on ET Now. Not a pretty picture when you look at the markets because we've given up all of those gains. In fact, we have seen accelerated fall, 1% down coming in for the Nifty right now. You have Nifty Bank that's seeing a gash of approximately 400 points. And if you look at the sectoral indices, all the sectors in the negative territory. You have barely PSU Bank Index is the only one that's in the positive territory, 0.5%. But that one was also given massive gains over the last few hours or so. Realty Index down about 2.5%. You have FMCG Index that's down 1.7%. Auto also under pressure in trade today. But what next for the markets? We have Naresh Virani joining us on the show, as well as we have Kunal Bothra. But Naresh, coming to you first. And the fall doesn't seem to stop. What exactly happened actually in the markets? Because at 12, we were still in the positive territory near the day's highest point.
So last 3-4 sessions, we've seen any recovery we get, and then the selling starts and it continues all through the day. So out here, the cases where we need to watch out for 24,750, 24,800, which is where we see a lot of support. That's the last major swing low. And what we are seeing is a slow and steady drift across the markets. And today, in the last 2 sessions, even the small caps and mid caps have taken a hit. But it's not panicky in terms of sharp drops happening on stock. It's a slow and steady sell all through the day. In this case, I would expect some bit of a recovery and a pause from 24,800. So if somebody is looking out for an investment opportunity, there could be stocks which could look interesting. The reason we say so is the global markets have not taken a similar hit. So Europe, US, etc. have not taken a similar hit. So it looks like a classical reallocation between India and China. In that case, this could be an opportunity to get into some large caps.
Okay, Kunal, hi, afternoon. What's with this late sell-off? Another 300 points gone?
Yeah, and I think it's more of continuation of the last 3-4 days for the indices. This tells you that the markets have been under severe pressure over the last 3-4 days, and still I think this pressure would continue for the index for some more time. Now, the only good part about the data which you are seeing is that for the first time in the last 4-5 days of this aggravated selling for the indices, the Nifty put call ratio has entered into an oversold territory. So we've almost hit 0.5, 0.52 on the Nifty, which means we could be very close towards maybe testing a near-term support for the indices. And my sense is that that could probably bring in some stability. So at least a sharp sell-off which we had seen in the last 3-4 days, and that aggravated sell-off, that may get arrested over the next 1 or 2 days. But that could just mean that we could be playing in for minor revival for the indices, or maybe some bit of stability which may come by into the indices. So I would believe that over the next couple of days, you may probably see a bounce shaping on the indices, but that could be a zone where traders should ideally try to trim their positions and maybe try to initiate few shorts as well.
That's the take coming in on the markets. Lots of stocks to discuss as well. But guess what? ET Now, Swadesh turns 3 today. And today we are celebrating. Ankur, in fact, is joining us live from the Bombay Stock Exchange here in Mumbai, where we've got a very special celebration lined up. Ankur, I can see that you're all set for the ET Now Swadesh celebrations to kickstart. Tell us what's the mood like and what's the plan? What are we going to see on the channel in the next 3 hours?
Yes, definitely. It's going to be action-packed 3 hours from Swadesh Samriddhi Summit. The idea is to celebrate the investment which is happening in India, and it's not India. It's new India now. We will start with Nivesh Se Khushhali, meaning how the investments have changed in this new India, and we'll start with none other than KV Kamath and KK Mistry, followed by a discussion with SBI MD Rana Ashutosh Kumar Singh. And one thing I would like to mention to viewers here, it is first time that Rana Ashutosh Kumar Singh will be talking to any media organization or on television after he has assumed charge as Managing Director of State Bank of India. So we'll discuss the next generation of banking, how it is changing, what are the challenges which are there in banking. And after that, we will talk about the wealth creators. Who has created wealth for investors in past 10 years, 15 years, and they have been 5 to 10 times. So we'll have a discussion with Amit Agarwal, Group CFO of Raymond, Rajesh Sharma, MD Capri Global. We will also be joined by Avinash Godkindi, MD and CEO Zaggle, and also Mazgaon Dock, a stock which has caught attention of investors recently with the returns which it has given to investors. And in the end, there is also going to be Swadesh Investment Plan. We call it SIP. And once again, I'll remind viewers, it's Swadesh Investment Plan, a special panel which we will discuss the art of making portfolio power compounding. And we'll have none other than Nilesh Shah. We will also have MFI Chairman Navneet Munod joining us here, and also Swaroop Mohanty of Mire Asset will be joining in the panel to discuss the investments which are happening in New India. So all in all, it is going to be action-packed 3 hours. So we will be starting the event very soon, and the countdown has already begun.
Absolutely, Ankur. Countdown has begun, and we will actually cut live to the event that is ET Now Swadesh Samruddhi Summit. Thank you so much for getting us the mood check from there. And yes, you have the top voices from the industry right here on ET Now and ET Now Swadesh. But on that note, we slip into a break on this edition of our closing trades with the markets down about 1%.
Back with closing trades right here on ET Now. Let's just see where the trades are settling in at. Pressure on Bajaj Finance after its Q2 updates. That stock has slipped to almost 4% now. M&M, in fact, is down a good 3.5%. You've got Asian Paints, you've got Cipla, Shriram Finance, Hero MotoCorp. You've got a BPCL which continues to languish, and even Bharti, which has seen a fall of about almost 2.5%. In fact, most sectors are in the red, barring little bit of a relative outperformance from IT, with Infi and Wipro taking the lead right now. Let me also welcome on board Ashi Anand and get in his thoughts on the markets. Ashi, hi, afternoon. You track IT pretty closely, and tech, I should say. Do you think that's one sector which will manage to sort of wade through the storm that we're currently seeing? Because it is showing some sporadic outperforming moves.
So firstly, thanks so much for having me on the show. And we really need to differentiate between IT services and, say, tech, or what we like to call digital or digital platforms. So if I just focus on digital platforms first, digital platforms is really the longer term story around value migration that's happening from traditional businesses towards digital forms of transaction. Now, this could be across payments, it could be across food, it could be across transportation, etc. Right? The whole shift towards digital platforms in India is honestly a theme that we believe to be very attractive from a longer term perspective, and really doesn't get too impacted by whatever's going on right now. IT services, and this is kind of separate to your kind of creating software for kind of global demand. This is a space which has actually been quite subdued for an extended period of time. And I think what markets have really been waiting for is some kind of an uptick in demand. With US interest rates starting to kind of actually reduce, there is kind of hope that as interest rates come down, the economy and businesses should revive, and that should actually help boost IT spends. Discretionary spends have been quite weak for the last year and a half. Now, as this comes back, these are very high quality companies, strong cash flows, very high levels of corporate governance, etc. It clearly is kind of a space that we believe has room to grow. But in order for this to be a sustained rally, you do really need the whole economic and business recovery cycle actually taking place in the US and across Europe.
Right. Hi, Ashi. This is Cheryl also joining in the conversation. So apart from this entire theme that you feel that the digital growth story of India is here to only stay and in fact grow and prosper going ahead, apart from that, which are the sectors that are looking attractive to you?
I think the one other kind of core space is really financiers. We are very, very comfortable in terms of financiers because if you just look at the market construct, you have one segment of the market where there is very strong business momentum, but these stocks have actually run up quite a lot over the last couple of years, and valuations are arguably pricing in a lot of this optimism. You have other segments which have actually failed to actually participate, but business momentum is actually lacking. Financiers is a space where you still have growth, which is in the healthy kind of teens, even touching kind of 20% kind of levels. ROEs are still decent. Asset quality is holding up reasonably well, with the exception of a few pockets. And you are being able to buy these at valuations that are fairly attractive, both on an absolute basis and as compared to historical benchmarks. So this is a space which we believe clearly does have a lot of merit. Now, apart from financiers, we also like other spaces in BFSI. We clearly like capital markets. We believe this has very clear growth runway, as the financialization of savings in India is still a nascent kind of trend. And as India develops, this really has a large amount of room for growth. So we like wealth management firms, we like asset management companies, insurance. We actually have exposures across each of these themes. Now, apart from that, I think capital formation, and I'd include real estate, I'd include capital goods. We need to be a bit selective at a stock level here, because some companies have really run up quite significantly and there is froth in certain segments. But that said, if you are careful about the stocks that you're looking into, given the sheer scale of business momentum and the kind of recovery you're seeing in capital formation spends in India, this is a space that we believe can continue to do well.
Right. Okay. Let's just take stock of what else is happening in the market right now. We're closing in fact, now at the low point of the day. It's actually M&M now, which is overtaken as the top drag on the index, not just Bajaj Finance. But Kunal, just to the point that you were making earlier this morning, the fact that, you've got some of the Nifty heavies, which actually sort of triggered the slide yesterday, the likes of Reliance, etc. The fact that they've breached the 200 DMA is going to be a further fall, and that in turn is going to pressurize the index furthermore. What do you see as the weakest link or cluster of stocks within the heavyweights in the Nifty?
So I think right now what we're seeing is selling across large cap names. So for example, in the last 5-6 days, the most underperforming stocks in the large cap space has been the likes of Reliance, L&T, ICICI Bank, and to a certain extent the other heavyweights. So I think what we are seeing right now is that many of these stocks have broken below their critical support points. But the data on the the charts, for example, for Reliance Industries, and maybe I think this could probably reflect to the other stocks as well, or many of the other larger cap names, is that when these stocks break below their long-term moving averages, the first instances where these stocks go into maybe a 2% to 5% kind of an average correction further. For example, after yesterday's correction of more than 4% for Reliance Industries, the stock has corrected by another 1.5-2% today already, which means from here on, rather than looking at this as a negative or a bearish trade, I think traders with maybe a higher risk appetite, they could actually start building up long positions over here, because we are at a point at a zone for the indices where the indicators are supremely oversold. We are looking at a put call ratio of 0.48 for the index. I have not seen, at least in the last 2 years, the put call ratio reaching these kind of levels for the indices, and the RSIs for many of the stocks as a cluster hitting deep oversold territory. So when we are into that kind of a zone, I think going into a contra buying mode could be a better strategy.
All right, let's put the spotlight exactly what is happening in the markets more closely, given the fact that we are actually near the day's lowest point coming in for benchmark indices. We did slip below that 25,000 mark at one point in time. You have the advanced decline ratio very much skewed in the favor of the declines as we speak. But you have ONGC among the ones when you talk about the crude plays. That's the only one that's holding on to gains about 1%. Apart from that, you have Reliance Industries that's caved in. You have the OMCs that are under pressure. You have the oil paint stocks, or for the matter of fact, tire stocks also that are under pressure in trade today. But Rashid, that brings me to my next question to you. What's your take exactly what is happening in these companies which are beneficiaries of or other are dependent on crude oil as a whole? What's your take on these sectors? How have you looked at them, especially the OMCs for the matter of fact?
So this is arguably a really difficult call to take at this point. And I think we really need to understand what's happening in the Middle East and what the kind of current market concerns are, and which is where you're seeing the pressure on these stocks. The whole Iran-Israel kind of conflict has been escalating for some amount of time now. And with the recent bout of missile attacks by Iran, the whole focus is really going to be on what is going to be Israel's response. There have been certain soundbites coming both from Israel and out of the US. And these are just kind of rumors at this point in time. But if the Israeli response were to be something where you are going to be targeting either nuclear reactor facilities of Iran, or you were to go after either the oil fields or oil refining of Iranian oil refining assets, that is something which would really escalate the conflict quite significantly. And the reason this becomes extremely important is Iran really has the ability to create a blockade on the Strait of Hormuz. And this is extremely important from a global oil trade perspective. If it were to escalate, right, and now you really don't know, from what we understand, the US is actually putting pressure on Israel to ensure that you don't go after oil assets because you want to prevent this at all.
Sir, then you can thank him.
But there is basically this effective kind of risk of if the situation were to escalate and there was to be some kind of a blockade, you could then go into a period where oil prices could move well above the kind of 80. You've already seen a 70 to 78 rise. If you start moving above 80, 85, a lot of these companies really, their margins get badly impacted. And that is really the whole risk. And I think until you don't have clarity around how this whole Middle East tension is going to play out, you probably want to stay away.
Away from these counters, given the fact that you don't know which direction the crude will head going ahead, and also higher crude oil prices would dent the margins for these OMCs. But on that note, thank you so much, Ashi, for joining us on ET Now and giving us your view on various sectors on ET Now. And as you can see on your screen, it is the ET Now Swadesh Samriddhi Summit that is underway. Let's cut across to that.
और अब मैं वेलकम एड्रेस के लिए मंच पर बुलाना चाहूंगी टाइम्स नेटवर्क और ईटी नाउ और ईटी नाउ स्वदेश के एडिटर इन चीफ मिस्टर निकुंज तालमिया को। निकुंज सर, आप मंच पर आएं और स्वदेश की ताकत को हम सभी से रूबरू कराएं और साथ में ये भी बताएं कि आज हम ये समिट क्यों कर रहे हैं। प्लीज राउंड ऑफ अप्लॉज।
All right, we'll get you snippets of that event that is underway in a short while from now. But for the markets, yes, under pressure in trade today. But let's take a look at what the metal counters are doing at this point in time, because with the rest of the market, you have the metal index also that has given up all of its gain now in the negative territory. And Naresh, talking about the metal index, which way is it headed from here on? Do you think that the cheer on back of the China stimulus is done away with, or you just think it's a pause right now?
मैं सबका बहुत बहुत आभारी हूं कि आज आपने समय निकाला। हालांकि मार्केट अभी भी चालू है, फिर भी आप यहां पर हैं, इसके लिए बहुत बहुत शुक्रिया। तो 3 साल पहले जब स्वदेश चालू हुआ था तो एक सिंपल उद्देश्य था, बदलो बढ़ो देश के साथ। और हमने पिछले 3 सालों में भारत को 30 साल लंबी छलांग लगाते देखा है। स्टॉक मार्केट्स ऑल टाइम हाई पर हैं, डीमैट अकाउंट्स ऑल टाइम हाई पर हैं। भारत की जो उन्नति इस समय हो रही है, इसका प्रमुख कारण है हमारा यूथ, इसका प्रमुख कारण है हमारा पॉलिसी फ्रेमवर्क, और इसका प्रमुख कारण है हमारे पास इस समय पॉलिटिकल स्टेबिलिटी है। स्वदेश चैनल का एक सिंपल पर्पस है कि हाउ कैन वी इनेबल यू टू टेक अ बेटर डिसीजन सो दैट यू कैन लिव इन अ बेटर इंडिया। तो आज जो हमारा समृद्धि समिट है, इसके अंदर हम यही बात करेंगे, आज, कल और आने वाला कल। आने वाले कल के लिए आप क्या कर सकते हैं, हम खास चर्चा करेंगे विशेष मेहमानों के साथ, और हम बताएंगे स्टॉक मार्केट में इस समय आपको क्या निवेश करना चाहिए। जब भी कामत साहब और मिस्त्री साहब आते हैं, मैं इनसे हमेशा एक सवाल पूछता हूं कि भाई आज के युवा वर्ग को अगर एक HDFC और ICICI बैंक बनाना है तो उसके लिए टिप क्या है। तो BSE में आकर के टिप की तो जरूर बात करेंगे। तो इसी छोटे से वेलकम एड्रेस के बाद मैं सृष्टि को बोलूंगा कि हमारे मेहमानों को वह अब संबोधित करे, उनका स्वागत करे लैंप लाइटिंग अर्थात दिया की सेरेमनी के लिए। सृष्टि?
थैंक यू सो मच निकुंज सर, हम सभी का हौसला बढ़ाने के लिए। और अब हम आगे बढ़े तो स्वदेश समृद्धि समिट के इस खास मौके पर अगर हम बात करें तो हमारे साथ मौजूद हैं इंडस्ट्री के वो दिग्गज नाम जिन्होंने दशकों तक देश में आगे बढ़ने और साथ ही बैंकिंग और फाइनेंशियल्स को का पाठ हम सभी को पढ़ाया है। जहां पे हम बात करें तो करोड़ों लोगों के सपनों को इन्होंने हकीकत में ना ही सिर्फ बदला है बल्कि वैश्विक मंच पर अपने कौशल का लोहा भी मनवाया है। इसी के साथ साथ वो ऐसे नाम हैं जिनको आपने टीवी पर अक्सर देखा है और साथ ही सरकार भी इनकी इंटेलिजेंस का पूरा फायदा उठाती है और कोई भी मौका नहीं छोड़ती है पॉलिसी में हर एक की डिसीजन में इनका टेक लेने से। हम बात कर रहे हैं जियो फाइनेंशियल्स के चेयरमैन मिस्टर केवी कामत और एचडीएफसी लाइफ के चेयरमैन के मिस्त्री सर का। साथ ही हमारे साथ हैं एसबीआई के एमडी मिस्टर आशुतोष राणा और साथ ही एलआईसी के ईडी मिस्टर आदित्य गुप्ता। हम सभी का आपका मंच पे हम आपको आमंत्रित करना चाहेंगे ताकि आप आएं और दीप प्रज्वलित करें। प्लीज सर। थैंक यू सो मच आप सभी का इस
All right, so that is the launch, official launch of ET Now Swadesh Samriddhi Summit. In a short while from now, we will hear out from Mr. K.V. Kamath as well as K.K. Mistry about the financial roadmap in India, where they see India headed from here on, given the fact that they have been huge contributors to India's financial sector. But talking about the financial sector right now, the picture in the Nifty bank is actually not that good, because given the fact that we have seen HDFC Bank under pressure in trade today, you also have some of the PSU banking counters that are trying to actually see some sort of recovery. But yes, actually let's note the recovery on Nifty bank as we speak, because a sharp spike coming in for Nifty bank from the day's lowest point at this point in time. There you go. Actually, we've moved away from the day's low coming in for Nifty bank, 0.6% downtick. As well as you have the PSU banking index still holding on to gains of about 0.5%. FMCG index is now taken over to be among the top loser on the index. Take a look at realty index, because some sort of recovery coming in for the realty index as well. There you go, 1.5% down now, but recovered significantly from the day's lowest point, Aisha.
Oh yeah, absolutely. But Kunal, does it seem like it's going to be just a very fleeting one?
The bounce?
Yeah.
Yeah, it should be, because I think the pressure which is there from across the globe, I would probably believe that that could be one of the reasons why the markets may still get into that selling pressure every now and then. So I think till the time these global data points, I think that doesn't abate, we may probably expect that the markets would continue to be into a process of maybe a bounce like what we saw on an intraday basis, but that could get sold into. So I think what we should be looking out for is to either play out for a bounce for the indices when they come back into an oversold territory, or when the bounce shapes up and when you see a decent rally on an intraday basis, that could be a good opportunity to create fresh shorts.
Okay, that's the take coming in on how feasible or sustainable this bounce is looking right now. Other than that, of course, technology seems to be doing okay. TCS, Infi, Wipro, TechM are the ones which are relative outperformers. But other than that, there's also BOB, Gujarat Gas, GMR Infrastructure, Torrent Pharma. These are looking like sporadic cases right now. But Darish, what's looking like the weakest sector in the market as of now? I mean, within the large caps?
So if you look at it, it's been purely a large cap hit. It is larger the company, heavier the weight, that has been more badly hit in this 4 days. So it has been Reliance or a HDFC Bank or a Kotak Bank. or even an ICICI Bank, which was a leader, has taken a hit. So it's a flow-based hit across the board. Heavyweight is taking a much larger knock. We are not seeing a similar knock happen in a pharma or in an IT as such. So the weaker parts are Reliance and HDFC Kotak, but moment the market turns around, they'll be the first ones to bounce as well.
Right. That's the take coming in for the markets at this point in time. Kunal, I wanted to check what's your view coming in for Avenue Supermart, because that one has actually seen a sharp knock. Actually, it's trading on very high volumes at this point in time.
Yeah, it's a stock which is prone to a lot of news flow, and we've seen historically that at least in the last 3-4 months that the stock every now and then when it gets into a breakout gets into a sudden reversal. The stock for I think a period of 1 week to 2 weeks gets into a corrective phase. Volumes are pretty much on the higher side, and then once the sell-off gets absorbed, selling gets absorbed, you see the stock gradually moving up into a high and breaking past about the previous resistances. So we can just expect that this time around the trend could be similar. The only change which you're seeing today is that the volumes are on the much higher side for Avenue Supermart as compared to the previous legs of the price correction for the stock. So which means we may need to wait for at least 1 or 2 days of confirmation. So I think, for example, if today's high that gets breached, we may be looking at the stock getting into a recovery, and today's selling could probably be one of the more of a capitulating kind of a sell-off for the stock. And if it breaks past above levels of say 4850, 4900 mark, we can expect a strong recovery for the stock.
Okay, that's the take coming in on Avenue Supermart right now. But Naresh, what's coming up on your buy list? Or, I mean, are there any stocks that you're looking at, not from a short-term play, but slightly longer-term time frame that you would look to buy in this current decline?
So in terms of, say, there are two ways I'm looking at markets. One is the momentum ones, which is where it's clearly diagnostics as a sector, which has been doing well. So that's a basket. And in terms of IT, which has been a relative outperformer. So that's the basket wherein you look at Dr. Lal Path Labs, Metropolis, Vijaya Diagnostics, etc. Second is the oversold or hit which has taken place in the banking space. So that is where HDFC, Kotak, ICICI looks interesting. Even a Reliance, which is down to the price point where it was on June 4th, looks very interesting. So it could be an accumulate on the heavyweights and the leaders like diagnostics.
Right. Kunal, what's your view coming in on the power sector actually? Because given the fact that with the rest of the PSU pack, you saw power also under pressure. Today also you have the power index that's under pressure. Any names that you're liking in that power space? You also have PFC, REC also that have been big winners but have cooled off.
Yeah, they have cooled off, but the price correction over here is not as sharp, at least in the last 1 week or so. So we looked at the charts, for example, for Tata Power, we looked at NTPC, the two traditional names, and both of these stocks, they have done reasonably well. In fact, Tata Power, being a high beta stock from this recent rally of 490, has just about corrected towards 470 mark, which is just about a 5%, 6% correction for the stock. And given the context of the market in the last 4-5 days, that would probably be a subpar correction for Tata Power. Compare this with the likes of NTPC, the stock which went below the 400 mark is now trading comfortably over the 400 level. So 425, 430 seems to be a fresh base or a support for NTPC. So when stocks up their bases and they don't participate as sharply in a corrective wave, that generally is an indicator that these stocks are more resilient, and that could be maybe a sign of a stronger sector or a relative outperforming sector with respect to the market. So bullish on many of the power names, Tata Power specifically as well as NTPC.
Okay, Tata Power, NTPC, not quite the financiers just yet. Just looking at some of the other stocks as well, which have been the newsmakers, and just want to take stock of what some of the Q2 updates have been like. BOB, the advances have seen an uptick of roughly about 11.6% there. Deposits have seen a growth of about almost 9%. BOB, the stock will just come up for you on your screens next. And it's also M&M Finance, though. The business assets have seen a growth of about almost 20%. Collection efficiency, though, has remained constant at about 96%, and their disbursals or disbursements have seen a downtick of about 1% for the second quarter of the fiscal. So that's definitely another stock which is reacting to its weak quarterly updates. GAIL, Axis Capital has initiated a sell, put on a target price of 185. They see risk in earnings from the higher LNG prices. So that's going to be the other stock which is also going to be in focus. The other segment that we were just flagging off with Ashi as well, Angel One, look at their gross client additions. They've actually seen an uptick of about 5.6% on a month-on-month basis. And the total client base as well, that's seen an uptick of 3.25% on a month-on-month basis and 61% on a year-on-year basis. So that's been quite a bit of decline. Having said that, the number of orders per day has seen a decline of about almost 3% on a month-on-month basis. And the overall market share, though, has seen an increase of about nearly 19.5%, while the F&O market share has remained flat on a month-on-month basis at roughly about 21%. So that's the other stock which is in focus. Kunal, I don't know how closely you're tracking these charts, not the most liquid names, barring the few odd moves that we've seen off late, but an Angel One, BSE, MCX, the market-related themes. Any opportunity there?
I do track them, and I think MCX as well as BSE, I think these stocks have done phenomenally well. And the best part is that these stocks have changed their beta by a huge margin. So I remember, I think a point where a couple of years back, MCX was a stock which used to be a very high beta. The stock used to swing by 30%, 40% in a matter of few weeks when there was some news flow or even surrounding the stock price. But that beta has changed significantly. Now the stock gets into just about a 4-5% kind of an odd correction in case if there is any kind of a negative news flow. That generally is an indicator that the stock is migrating into a higher price uptrend. So I think BSE, MCX, both of them, they look attractive. Angel One is also something which I have been tracking, and in fact in the last 3-4 days the stock is nearing a 200-day moving average breakout. So expecting another 8 to 10% upside at least over the near term.
All right, so that's the take coming in on counters related to the exchanges or the stock market. That's Angel One, BSE, or for the matter of fact MCX.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.